Keller Williams Arizona Realty brings you Ignite Elementals, Session 7, Financial Basics with Ben Petro.
Here, Ben.
Awesome. Thank you so much. Good morning, everyone. I will try and live up to that intro. I'm shocked at what I just heard, given that last time I had a meeting with Leslie and Jim and Kate was in it. I was like, I don't know what a green sheet is. I've never seen one, but I'll take that, and I appreciate it. This is probably one of the more important classes, and we're going to dive into it. There's a lot of material to get through. My intention today is to try and make this as valuable as possible to you. So I'd encourage you to jump in with your questions. There are a lot of modules in Ignite. As was mentioned, I'm with the Barker team. I'm the director of sales for Rich Barker's team here in Arizona. With that, I get the opportunity to see a lot of new agents. I get to see a lot of agents make their first couple of deals, make their first 5 or 6, and then I get to see their expectations at tax time. Hey, what's this royalty thing? What's my commission split? How do I cap? When do I cap? All of these are critical pieces to managing our small businesses. I think some of the things we hear in real estate school, or as we're pondering being a realtor, we say, look, this looks easy. I'm going to get 3%. I'm going to sell $400,000 houses, 3 times 4. I'm going to make $6,000, $8,000 per transaction, and that's all profit. And unfortunately, that's not the case. Real estate is incredibly lucrative, but we have to treat it like a business. We have to know the difference between revenue, profit, net profit, and the difference between what we put into our business account and what we're able to actually put in our personal account. When we go through these numbers, they can be a little depressing. It can be a little depressing to say, wow, I did an $8,000 transaction, and at the end of the day, I'm going to pocket maybe $2,500 into my personal savings account. And with that, I have to do everything in my personal life. And that's the way most businesses run. I'm lucky enough that before getting into real estate, I got to be around a number of businesses and their financial planning and how they forecast their results. And you'd be shocked. You'd be shocked to know that most hotels run on a 6% margin. Most grocery stores run on 1.5% margin. That's a really small amount from the dollar you took in to the penny and a half you're able to put into the bank. And then we look at something like the coronavirus that has shut things down for 2 months. Each month is roughly 8%, right? 12 times 8 gets us close to 100. So there's 16% of margin gone for all of those businesses, those small businesses, those big businesses. And it has a deep impact because it's pure profit that they kind of miss out on, as opposed to, revenue that trickles down into profit. So we're going to spend some time on making sure we understand. I can tell you there are horror stories. I know agents who have done 400,000 or 500,000 in GCI and have ended up net zero at the end of the day because they didn't manage. There are agents in this market center that do millions, literally. I'm thinking of one agent in particular, but their margins are 5 and 6%. So it's a unique business. You are in charge of your small business. Nobody else is. No one's going to step in and say, let me help you file your taxes, or don't forget to put this in your savings account. Don't forget to pay your dues. Don't forget all of these different charges that come along with real estate. So it's real important that we not only know what these charges are, but that we budget for them, that we plan for them. And we know that if we want to buy a new car and we need to get $5,000 for a down payment, how many houses is that, right? And after a while, and I don't know how long you've been in the business, we'll do some quick introductions, but I think things in houses like, oh, I want to take a trip to Mexico. I need to get 6 more units sold this quarter or whatever it is. And it's a weird way to think, but I happen to really love this business. So let's do a quick round of introductions. I don't know that I've met most of you, so we'll keep it brief if we can. Let me know who you are and where you're from and why you're in real estate. Let's start with Eric.
Let's see. Yeah, originally from upstate New York. I've been here on and off most of my life at this point. Real estate, I kind of like the game of it, doing the research, learning about it, and I like the flexibility and the independence.
Outstanding. Outstanding. James?
James, are you there?
You there, James? I think I saw him just pop off. I'm not sure. How about Thomas?
Oh yeah, Thomas Eulenberg here. I grew up in Grand Forks, North Dakota. I've been in the real estate industry for 15 years. I love selling houses. Well, I haven't sold any. I just started my realtor career 3 weeks ago. But I like to do open houses and knock on doors, and that's my trade.
Outstanding. Outstanding. I love selling houses. I love open houses. I love knocking on doors too. So we got something in common.
Cool. Yeah. I don't care how hot it is. I'll be out there knocking.
Well, I started real estate in the summertime in Arizona, and all of my effort was kind of door knocking and open houses, and I did pretty well. So I love it myself. The summer separates the wheat from the chaff out here.
That's right. That's right. Can't wait. Thank you.
You bet. Keith?
Yeah, good morning. I've been out here about 30 years, been in the business about 13, most of it in buying and selling hotels for clients. But in retirement, I've decided to start doing some residential. And just want to say, Jack, you've done a great job during this entire process. So thanks.
Oh, well, thank you. They all make me look good. So we had a good team. I appreciate it.
Thanks, Keith. Victoria?
I just moved here from Washington State last August and got my real estate license the end of February. So just started.
Welcome.
Been working with some renters and trying to find a buyer.
Fantastic. Thomas?
That's the same one. He lost it for his audio.
So sorry.
Are you
all right. How about Carrie?
Hi, I'm originally from the suburbs of Detroit, Michigan, and I've been in Arizona like a year. I got my license in January, so I've only been doing real estate for a few months, but something I've always wanted to try.
Awesome. Welcome. I think you made a good choice.
Thank you.
Greg?
Hi. Yeah, I'm originally from Ireland and then moved to Canada, then California, and now I'm here. But I love real estate. I love being able to pick my own schedule, figure everything out, and I like helping people, especially first-time home buyers.
Fantastic. Welcome. And Jennifer?
Hi, I hope my audio is good. I'm in my car, but I moved to Arizona almost 2 years ago. I have a background in interior design. I've been doing that for 7 years. So I love the fact that I get what I put into the industry and I can merge both of them and really create an amazing experience, not only for myself, but for those that I basically come in contact with.
Awesome. Outstanding. And Dan?
Dan.
Sorry.
No, you're fine. You said right. I'm from China, so you can probably tell from the names are different. Yeah, so I moved to Arizona last year, so not quite a year yet. And the reason I choose real estate because I like the flexibility and the freedom it gives to me, so I can work on my own pace. Yeah, it's great.
Fantastic. Thank you, Dan. All right, I think that's everybody that I can see on here. Is there anybody that I missed?
James, did you make it back? He might just be listening. All right, I think you got him.
Well, let's dive into it. So again, in the interest of time, I'm gonna work through the slides. I think as I tried to look where I could cut this down a little bit, every bit of it's important. Every bit of what's on here is important. If you haven't had a chance to read Millionaire Real Estate Agent, I strongly suggest you do. I did not join Keller Williams with the thought of like, oh, I'm going to bleed Keller Williams red and I'm going to want to meet Gary and I'm going to read all these books. I joined it because of the brand and the training, and the training is outstanding. And over time, I'm converting into bleeding Keller red. But what I will tell you is that my two favorite pieces that we have here at Keller Williams is Ignite. You have a chance for Bold and other things. Ignite as a new agent is phenomenal. It really is. How do you do this job? What they don't teach you in real estate school. And the only book that I won't say the only, but my favorite book, and that I go back and reference quite a bit, is MREA, Millionaire Real Estate Agent. So I strongly suggest give that a read. It's really focused on how do we as an individual agent manage our business, manage our growth, manage our expenses, and learn how to run a small business that's specific to real estate. So it's an interesting book. can help you if you're brand new. It can help you if you've had 15 years in the business. So I'd encourage you to read it, and the presentation puts to a little bit of this. So I'm going to go through these slides. If you do have a question, please jump on in. And I think that's where we really find the value. The slideware is nice, but getting inside each other's thoughts and being able to model some real things in our head, I think is very, very helpful. So I'm going to share my screen and move to the presentation. 1 second.
All good.
Amazing how good all of us have become at doing Zoom calls over the last couple of months. You know, it's crazy. My kids are better at it than me. All right, well, we've kind of done our introductions. You know, today, again, we're going to focus on really how do we manage our small business? How do we look at the differences between revenue, profit, expenses? How do we start to build our own profit and loss? And how do we start to look forward and forecast our businesses? That was easy. Okay. So when we look at what do successful agents do every day, we grow our business through lead generations, listing presentations, buyer presentations. We look and preview real estate, but every day we also run a business, right? We market our listings. We have the role of being a marketeer. We show buyers houses. So we've gone from being a marketing person to a salesperson. We negotiate contracts. So we're kind of a CFO and accounting and legal, all of those wrapped up into one. Transaction managing closing. So now we're administrative. If you're an individual agent, you're wearing a lot of hats. Vendor management, back to the finance and CFO position. We set goals, we do financial planning, and we have to manage risk and make sure that we're compliant with the AZDRE, with SAR, with Keller Williams, with a variety of different folks that if we're not, we can lose our license, we can lose our revenue, we can lose our way of life. So this is a lot to have on our shoulders compared to your average employee in a business, which I've loved being before, but I didn't have to worry about 90% of these things. I had to show up, do my specific job, and most of it, my taxes were done, my health insurance, all of these different elements were done for me. And number 9 on that list, as you can see, is manage money. This is not something I was born to be good at. I am great at spending money, like probably better than anybody on this call. Like if you said, Ben, what would you do with $14? I'll figure it out. There's a trip to Taco Bell there, maybe a drive-in movie. But when you say, you know, Ben, what are you saving for? I'm like, nothing. Like, why would I save? But I'm getting better at it. And there's a difference between my personal life where I get to be an idiot and my professional life where I have to be responsible for everything on this list. And I have to be careful because we can not just lose our license, skip your taxes, you'll go to jail. You know, they never caught Al Capone for any murder or anything else, but he didn't pay his taxes. They put him in Alcatraz. John Gotti, right? Multiple murders, ran a crime organization, never ever busted for racketeering, didn't pay his taxes. So they love real estate agents. So they take an extra look at us, but we do have some very unique provisions under the law that help us manage our expenses, get a little bit better tax treatment, as you might recall from real estate school. So we're going to talk to this model a little bit. That is, I'm working 2 computers here, bear with me. That is the MREA models, and we're going to start off with the perspective. So if you think back to the classes that you took in that real estate school, which gave you everything you needed to do to run a small business, do you remember the module where they spent time saying, here's how you manage your money and don't go to Alcatraz like Al Capone? I do not. I will tell you, I got into real estate to buy real estate school. So I went to real estate school 3 times. I went to all 3 of them that were offered here in Arizona at the time. I made an offer to buy all 3, and somebody came in and bought 2 and left the 1. So I decided to go ahead and sell houses. But what I can tell you is I was shocked at the responsibility they put on each of us, and the 90 hours, that tiny bit of time that we're with 70 people in a classroom. It just doesn't get you there. It just doesn't get you there. And I'm grateful that Keller has a lot of products for us, a lot of classes for us to learn, a lot of technology for us to make it easier and get us through some of the stickier parts. Habits for a financially sound business. These are generic across almost every single business, but specific to real estate. We have to set our goals. We have to know we're not in business to just see what happens. We're in business to pay the mortgage, pay the rent, buy a car, put our kids through school, whatever those things are, plan for retirement. And unlike our past jobs we may have had with a 401k that pulled out by itself, and taxes and Social Security and everything got pulled out of your check, you have to pull those out. We have to estimate, save for, and pay for future expenses. 1 second, sorry.
Oh, good.
A little slow here on my side, sorry.
No, you're fine.
We have to be fiscally savvy by reviewing our statements monthly. We can't just put it off. We can't get busy like, oh my goodness, I'm closing 2 escrows. I'll do my accounting later. It will catch up to you, and so very quickly. For me, the fact that the coronavirus pandemic pushed off filing taxes for a couple months, what a blessing in disguise. And we have to prepare ourselves for a more financially secure future. How do we do that? I'm going to retire in a certain number of years, and if I'm not careful and I don't plan for that, I'm going to be selling houses till I'm 90.
Mhm.
Money is good for the good that it can do. It's from our fearless leader, Gary Keller. These are some questions that are on my slide to ask, and so I'd open it up if you're on mute. Please unmute if you have an answer for the question. But what is the purpose of business?
Generate revenue.
Well, that's interesting. That's a good one.
Or generate some profit for the owner.
There we go. So it really is to generate profit. You know, revenue is a way of getting there, but none of us are just in the business to sell stuff. I am goofy enough about selling houses. I might get up in the morning and sell one for free. Probably not, but I'm not in the business of real estate to make revenue. I'm in the business of real estate to pay my bills and to save for my future and do things with money. And that's really the profit side of it. So when you set your goals, you become extraordinarily aware of how many transactions you need to close to get your goals accomplished. I talked about this a little bit earlier, that when I think about a trip to Mexico, or I think about Christmas for my kids and what I want to do, I start to think in the number of transactions that I have to get done and or achieve those goals. And then being inherently lazy, I go, oh, if I really want to do more, I have to do another 6 homes between now and November if I want to accomplish all of these things. I'm engaged to a realtor, and she counts when we get married by number of transactions. You know, if you got to sell 32 more homes, then I can have the wedding that I want. So this is a part of our life, and we get used to it. But money is good for the good that it can do. I think is very powerful. We're not just in this business to sell houses, but we have a lot of goals, and for most of us, those come from our heart, and they're important to us. They're the cornerstones of our life, and that's what money can do for us. Financially sound versus financially unsound. So let's just have a quick look at this slide. And we're going to kind of go through this commission model. 1 second. I'm trying to add some notes here. And we see sold commission, $9,000. You get a commission check for $57.60. You put that in your personal bank account, you put it in your wallet. What didn't happen in this model is we didn't save for taxes, and we didn't save for our business. And in very, very high likelihood, if this stays our pattern, we're going to end up with a massive tax bill at the end of the quarter. Yes, you have to pay taxes quarterly. And if you wait till the end of the year, you're going to be counting transactions to stay out of jail. So you'll see I come back to this jail part a lot. Let's move to the sound model, where we have a sold commission of $9,000. We pocket $57.60 after our expenses and royalties and splits. We put $17.28 into our business bank account to save. Our personal bank, $4,032, of which we paid into our tax savings account, $1,613, and we netted $2,419. That's really where that 9,000 breaks down to. You receive 9,000 in GCI and gross commissions, and what goes into your wallet, what you should, if you're doing a financially sound model, what you should end up with is roughly $2,500 that goes into your personal spending account. 9,000, goes to 5,760, goes to 2,419. And they say that with an exclamation mark. Expenses and taxes are accounted for, but do you remember when I said it's a little depressing? You're like, oh my gosh, can that really be true? And it absolutely is. And that's what a business looks like. We're so used to getting a check, and we look at it and go, well, I paid my taxes and the rest of this is mine. But again, if we remember those businesses, and any business you can think of, some of the most powerful businesses on the planet with the highest stock ratings have margins, the highest margins you'll see on Wall Street, 21, 22%. This one is doing a little bit better than that. So you can rest assured you're doing a little bit better than Facebook on profit and Google. Any questions? I'd like to just open it up for a moment if there are any questions as we're going through this right now. All right. Well, building on a financially sound business example we just reviewed, let's take some time and look at the models presented in MREA, the Millionaire Real Estate Agent. So this comes right out of the book. We can take a look at it. It's sort of an illustration of how we look at our commission and how we should allot for profit. The idea is to drive 40% to the bottom line, a huge margin. As just discussed, most of the businesses, restaurants are 13%, grocery stores are 1.5%, pharmacies, 22%. Most e-commerce properties run in the 22%, so that's eBay, Google, etc. So we're going to really try and shoot for a 40% margin, which is virtually unheard of in the business world, and certainly in the small business world. Here we have an example of a $10,000 commission check. We have GCI gross commissions of that's our 10,000, that's our 100%. We know that the cost of sales, and we're going to get into cost of sales, but that's what does it cost to sell something, is $3,000. And we also know that our operating expenses, just to be in business, just to continue to be a licensee, when we average that out against each deal, is about 30%. And that gives us 40% in net profit. So as we break that down from $10,000, we have $10,000 in GCI. Our COS, cost of sales, is $3,000. Now we're down to $7,000. Our operating expenses are $3,000, giving us a profit of $4,000. We're going to spend a little bit of time talking about the flow of money. We have the key percentages of our economic model. And again, those are pretty good percentages. I actually think they might be a little aggressive, but if you kind of use those to model your business, you're very likely to end up on the good side with a little more profit than you thought using the ones from the previous slide. Let's review the flow of money we have in the real estate business. Our income minus our expenses across all categories equals the profit. What goes in, what goes out, what's left. Pretty simple model when we look at it this way. So we want to look at what our goal is, where we kind of turn this pyramid upside down. So what is our profit goal? Because this is how we have to live. If my mortgage is $1,500 a month and my food is $500 and I calculate all this up and I say, wow, I need to make $6,000 a month, that's where I start from. I say, well, 6 times 12, that's $72,000 a year in profit that I need to have. So I start from profit, 72,000, and I need to know how much income do I have to sell minus my expenses to equal my profit. A little bit backwards, but the first pyramid, if you will, without a really nice tip on the end, is kind of the way that business works in real time. The second one is how you forecast business, which is you kind of turn it upside down. So it's either known as a top-down model, income, down to profit, or a bottoms-up model, where we start at the bottom with profit and work our way up. How do we get income in this business? And it's pretty straightforward. There are some other ways to get business. Property management may not be perfectly represented here. You can sell timeshares. Sounds like so much fun. But here's how we earn: listing income, sales income, referral income, and leasing income. These are the primary means that we have to generate business inside of our real estate brokerage. Let's spend a little bit of time on cost of sales. You'll hear these two terms in almost any business. They're kind of across the board. We have cost of sales. There's also cost of goods sold, a little bit different, but we're going to focus on What does it cost to sell? The cost, the expenses related to each transaction you make, the cost of making the sale. So if I do a transaction, I have to pay the office, pay fees to my broker, known as company dollar. I pay my royalty fees to be part of Keller Williams, use the advertising, use the tools and the beautiful technology. Really excited about the technology this year. That and staying out of jail are my two things this morning. Commissions or splits paid to employees or independent contractors, and any referral fees that we might have. So these are the costs of sales. They're things that before we can get to profit, we have to take out of the revenue that we brought in, the income that we brought in. We're going to dig into cost of sales just a little bit. And so the first example is if you have not capped. I'm pretty sure everybody on this call will cap in no time this year, especially we have new cap rates this year. If you've not capped yet on company dollar or royalty, this is what the net commission you should receive is. The formula is GCI minus cost of sales. So we know cost of sales is roughly 30%, minus royalty, which we know is about 6%. So that's your net commission if you have not capped. Our next one to remove out cost of sales is if you have capped, because if you cap, some of your costs go down pretty dramatically. So that's our GCI minus our royalty, which is 6%, equals our net commission. Net commission still not profit, but the building block to get to profit. And then the final is if you've capped on both. What is the, I just rolled over in March, so I'm not currently capped. You have capped on both. And so that's where those of you, as you get through this business, you'll cap on one. Typically you're going to cap on company dollar on one transaction. And then the next transaction or a transaction after that, you may cap on the royalty. They don't typically happen on the same deal unless you're out there selling like $2 and $3 million houses. But keep in mind, you have to know each of these and where you are during the year to adequately forecast your business. If you're not capped and you run through our cost of sales model and you forget you're paying royalty dollar or company dollar, you're going to come up significantly short on what your year-end goal was. So we have to not just plan forward for how many transactions, but how many transactions will fit in box number 1 where I've not capped, box number 2 where I've royalty capped, or not yet royalty capped on company dollar, excuse me, and then finally where we capped on both.
Yeah. Ben, if you don't mind, if I just jump in really fast, because I know we have a lot of PC agents on the call too. So that model that Ben just went over, and most of you guys that I've seen on here, I know have already done this, but in our coaching file, there's that MREA economic model that we have adjusted, actually somewhat talking with Rich Barker and Joe and myself, adjusted that so we have planned for those things in there so that you know how many closings, how many appointments. So if you haven't done that yet, which I think most of you have, go back, revisit it. There's a video in there and a worksheet that we've tailored to help individual agents as well. So it's all based on the model that Ben just shared with you, just kind of broken down into smaller steps.
Thank you.
Thank you.
All right, so our next one here is an activity, and this is going to chew up a little bit of the clock, but it's critical that we understand this one. So we're going to spend a little bit of time. We're going to take about 8-10 minutes, and this activity we're about to complete will help you determine how you'll achieve your profit goal. We'll be working backward from profit to determine your activities and your budget. So for this activity, you'll want to get out a calculator or your phone. We'll run through an example of the activity together, and then you'll have 5 minutes to go through it on your own. I would say in pairs, but with Zoom, give yourself a couple of minutes and try and work through the activity yourself. All right, so this is where we're going to start. What is our net profit goal? So for each of us, it's what do we intend to make this year? What do we have to make this year? What would we like to make this year? This is one of those moments where we've just got to be very realistic with ourselves. We've got to say, as much as I'd like to make $2 million this year, my first year in real estate, what do I need to make, and what are the building blocks that I'm going to need to get there, and what's a good safety margin? Because what we've learned for sure for agents starting here in 2020 is that life throws us curveballs, and many of those aren't aren't the ones that just hit us in our personal life, but they're these big, here comes the buzzword for 2020, existential threats. We couldn't have predicted coronavirus, and it caused us, many of us, to not be able to go do our jobs for weeks and even months. You want to make sure you've got a little bit of buffer there. So we want to know our net profit goal. In this example, we're going to use $100,000. We have a gross profit goal. So we're going to divide our net profit by 60, add in our percentages, and we come up with our gross profit goal needs to be $166,000. And then what does our gross commission income have to be to give us that gross profit goal? So we're going to divide gross profit by 40%. That gives us $416,000. We have to get GCI of $416,000 to reach our gross profit goal of $166 to net $100,000 a year. And if we divide this by our average home price and our average commission, so for this example, we're going to use 7.5K, $7,500 of net commission, we're going to have to sell 56 units to get there. 56 units equals 416 in gross commission, breaks down to 166 of gross profit after expenses, and then we get our net profit goal hit of $100,000 post-tax. Anticipated cost of sales, cap, $23,000. I think this is adjusted this year, but I'll come back to that at the end. Our operating expense budget, we'll multiply our GCI by 30%. Is $124,000. So we're going to spend $124,000 this year to earn our $100,000. So we're going to have business expenses that are actually greater than what our net profit is, and a little bit under what our gross profit is. So let's try and do this exercise, and let's put the time into it that we need. So if we run a little bit over, that's okay. I think this might be the most critical step, is kind of understanding this math. So if you have your participant guide, I think on page 10, you'll be able to follow along and complete the activity. So what I'd like you to do, if you can, is write down your annual net profit goal on the top of your piece of paper. In this example, we wanted $100,000 was our goal to earn for the year. So that's what we would put. Second, we want to calculate the gross profit goal. You need to make the account for the tax liability on your net profit goal. We recommend anticipating a 40% tax liability. While that's aggressive, it will keep you out of jail. To calculate the gross profit goal, we would divide our net profit goal by 60%. Step 3, calculate the gross commission income you need to attain your gross profit goal. For me to calculate your GCI is to take your gross profit goal and divide by 40, or 0.4. Then finally, we'll calculate the number of homes you must sell to achieve your GCI. This formula is to divide your GCI by the average commission income that you anticipate receiving. Then you'll calculate your anticipated cost of sales. Take 5 minutes, and if you would, fill that out on page 10.
Hey, Ben, would you mind putting that slide back up just in case someone needs to look back at it?
You know it.
Thank you.
Oh, sorry.
That's okay.
There you go.
Thank you.
You bet. About 2 more minutes. All right, we have 1 more minute. Let's try and wrap up if we can. All right, has everybody had a chance to finish? Does anybody need a little bit more time?
That was good.
All right. So having just gone through that exercise and keeping in mind I gave the full heads up that it can be a little depressing to look at all the money you pay out to the government. But as you look at those numbers, how do you feel about what it takes to get your goal achieved, the number of units? Would anybody like to share what they came up with?
Say it again, Eric. I saw you mouth it. But
It seems impossible. It's 34 units.
Seems impossible. Well, it's not impossible, but it is daunting. It does look like a ton.
Okay.
Thomas, did you want to share?
It looks like I need to sell one hell of a lot of houses to make the money that I want, but I'm not really worried about the money. I'm just interested in getting out there and selling and talking to the people. And, you know, I run another business, so I've got that stream of income. So I just want to, you know, do as well as I can and really hustle it up. And I'm more interested in the talking to people, the closing and the presenting and the listings, and just learning my craft and perfecting it and getting really great at this. So, I mean, I don't really have a goal in mind, just as many as possible. And I'm not that good in math, and it told me I needed to sell 666,000. So I definitely have my work cut out for me.
All right. Well, Thomas, if you need any help with that as you're getting out there, I love the motivation, love the attitude. If you just bear down and sell houses, that's half the battle. But
yeah,
when you're ready to do some math, give me a buzz. Anyone else?
I need the help. Thank you.
You bet, man. Anybody else want to share briefly what they might have seen in that, or how they feel about the exercise that the number they've come up with?
you know, I think something that we talk about, how Eric, you kind of jumped in and said, you know, it seems like this is a pretty big number. I think really taking the time to then think, okay, well, 34 on the year, what does that look like in the month, like we talk about, right? And what does that look like in the week? And kind of break it down to think and go small before you go big. So if that number that you're looking at is overwhelming, which it very well could be based on your goal, really making sure that you step it to, okay, well, maybe let me look at the monthly and let me take it 1 month at a time, and let's talk about the activities and generate those. Sometimes I find that helpful if a number seems a bit daunting.
Absolutely. Break it off in small, easy pieces. It does look crazy when you first get started in the business. It really does. Even if you've been in for a while, I think it can be daunting, but it's 1 month at a time. And once you're able to get 2 escrows done in a month or 2 transactions done in a month, getting 3 isn't that hard. And I think I might have mentioned I'm an inherently lazy person. So I do my work to sell, and I really enjoy that in real estate. I have enough time to hit my goals, and I also have enough time to do all the stupid lazy hobbies that I have. All right, we're gonna move on back to sharing my screen, and I'm gonna move to the next. All right, best practices is the next section. And what are the best practices as we operate our small business? We want to gain clarity on our big life our hopes and dreams so that we can adequately forecast and budget for them. We want to set our personal and business budget, set up our business entity, critically important. You have to have your own business. It doesn't take a lot. There are a lot of places online that can help you do it, or for $50, $60, you can set up a business. Open additional bank accounts for taxes, expenses, and other savings. Also a critical piece. Don't try and run this out of your personal checking account. Download and use the MREA chart of accounts. Purchase and download tax accounting software. Hire an accountant, CPA attorney. Set dates to calculate and pay your estimated taxes, and prepare for your future insurance, savings, investments. Any questions on those best practices? You may be able to check off the first item on this list, given your experience in goal setting. And in today's short goal exercise, I'd encourage you to go through the list, see if there's an area on here that you haven't done. If you haven't set up a business entity, get some help in doing that. If you haven't figured out that, gone into your local bank and said you need to open up a business account, get a separate set of checks, and make sure you have an ATM card and know how to deposit to that account, you should. Finding a CPA and an attorney are important. These are things you could work in another company as an employee for your whole life and likely never have to do. Find your resources at the Market Center. Ask agents that have been around. Give me a call. There are a lot of tax specialists that focus just on real estate, given we're a little bit unique in how the IRS treats us, and that we have considerable expenses, from mileage on our cars to buying signs. There's a ton of expenses we're seeing doing these numbers in our job. Many of them have taxation benefit, not double taxed.
Can you talk to us a little bit about how you personally manage all of your, like what works best for you, Ben, knowing that it might not work best for everyone, but do you personally keep a spreadsheet? How do you keep track of what you're spending?
Sure. I think we've gotten a lot of technology that helps us do this job. I'm a big fan, and there are 2 or 3 different apps, but the one I use is Quick and Small Business. And what it does is, as an example, as long as it's on your phone, whenever you're in your car, it automatically tracks your trip. And at the end of it, or the end of the day or the week, you go back and you say, yep, that was a showing, and add that to my spreadsheet. And yep, that one was to go pick up signs at K&S. So that's also, so it lets me real easily manage my expenses, and it auto tracks where I'm at. It even knows that I'm at a store, and it asks me, do you want to make this a business expense, or you're at lunch, do you want to add this? So being able to do everything on one app for me, and again, for me, that's QuickBooks or Quick and Small Business, either one. They're really cool apps, but the Quick and Small Business is free. I think at the end of the year, you pay maybe $25, and it kind of prints your taxes out. So I use as much support as I can. When I make a business expense, I do it on a separate card. So with that separate card, instead of trying to figure out, did I go to lunch and that was with a friend, or was that business, or did I go to Walmart and buy paper for work or home, I can quickly see all of my business expenses on one roster. So for me, it's most of what I'm doing, I learned kind of from the same Ignite class, which is have a separate business account, and be disciplined about where you keep your money and where you store your money. Don't borrow from your business account to pay personal expenses. Don't use your business ATM card elsewhere. So for me, it's really relying on the technology. KW has great technology to not only see what you've been paid, but at the end of the quarter and at the end of the year, a lot of forecasting tools. And on the expense side, using automation. And I don't work for Quicken or QuickBooks, but I certainly put their product forward for a real estate agent as making it super, super easy. And the last thing I'd share is you've got to plan your time. You've got to say every week, I can't forget that I'm not just a salesperson. I know that I take my time as a marketing person, but I have to remember that I'm also a CFO, that I'm an accountant. And you've got to give yourself time in your 20% a week. For me, it's 2 hours every Saturday. I get up in the morning and I sit down and I look at my expenses. I make sure that I tracked everything. I also try and see where I'm at for the month, and am I going to make my plan? Sometimes I have to log into KW and go look at my upcoming green sheets. So taking the time to plan is one of the more critical things. And I think it's easy for us to forget as salespeople that we have to be CFOs also.
Mm-hmm.
Can you talk about business entity a little bit and LLCs and those types of things?
Sure, I can. So I'm going to drop to the screen if I can here for a second. So I can see.
Yeah, that other stuff in here, Ben, about the success habits and stuff, I go over that with them at the end. So if you just want to keep kind of taking a little bit of questions on finances, that's great.
Okay. Well, before I was in real estate, I hate it when people drop their careers. But I had the opportunity to be a CEO of 3 different companies, and in the larger spectrum of bigger public companies, what they call a GM CEO. So I'd run about 14 companies at a time. And it's critical how you manage your business, but most important to your question is, what do you call it? Is it S Corp? Is it C Corp? Should I be an LLC? Should I be a PLLC? So I'll have to give you this disclaimer. Any information that I give you on tax or legal advice and how you might want to structure your entity is not a substitution for your own good judgment. And please do see a CPA or an accountant before making any tax decisions based on this conversation. Ow, I'm covered.
Wow.
Tell Jim Dunning I gave my disclaimer.
Well done.
The PLLC is what you'll see most agents choose. And what this does is allows you to have a personal liability corporation. The L in LLC, well, the second L, is liability, right? So that if somebody slips and falls on your watch at your open house or in your private home office, how much liability do you take on? If a home deal goes south and the seller wants to sue you, how much can they sue you for? If you're not in an LLC where your liability is limited, they can sue you for whatever they want. So we want to make sure that we stay within an LLC of some sort that limits our liability and allows us to operate a small business like any other small business with certain risks, and some risks we aren't responsible for. So PLLC is probably the most common. I have a little bit more complex situation, so I run my business as an S corporation. And with an S corporation, I'm able to pay myself a salary, pay employees a salary, and run a different sort of gross income chart. It's not the most tax efficient, but it helps me for the other things with my own personal financial situation. So what I would encourage you to do is look at the differences between LLC and PLLC. I think the guidance that you're going to get from almost any real estate organization is to be PLLC. You can go online. There are a number of very respectable companies, I think, that you can start your small business with. If you put into your Google browser, start a small business, you'll go to like LegalZoom, which is probably one of the best. They're a little bit more expensive, but LegalZoom has packages which file for you. They'll file your taxes for you. They have a lot of different programs that are $49, $59, $69, $129. So go on and you'll see those personal tax situations when you go to a LegalZoom, and they'll say, what do you do? Real estate agent, Arizona, and they'll guide you towards, hey, a PLLC is going to give you this type of coverage, give you a great tax situation, and here are the minimum requirements to do it. And then you can look at, the other options as well, which I would only recommend if you have good financial advice and good tax advice. Do I want to be a C Corp or an S Corp or a pure LLC? But PLLC is typically the way to go. You can set that up online through a company like BizInfo or LegalZoom. There's a requirement. It takes a few weeks. You actually have to place a newspaper ad in Arizona and advertise who you are and you're in business, and those companies do it for you. So it's got to be done. Most of those services that are cloud-based also allow you to open up a business account at that time, set your board members, do all of the legal requirements so that you get that kind of permissive control under the law to be limited liability.
Thank you.
You bet. Any other questions on that part, or entities, or how we want to set up?
Could you, and this is me just asking, knowing that you've set your disclaimer, what are some of the limitations that you were just talking about, like in a PLLC, or like the requirements or minimum requirements? Do you know examples of any of those offhand?
I do, and I'm going to be careful not to state the statutory limits because they're they're different. You know, she got on the call this morning saying, "He's like, why would I get Ben sued?"
I'm testing you. No, I'm just kidding. And the only reason I ask, and I think this is important, which you said it, always go to your tax advisor, because my CPA had directed me certain ways based upon where I was in my career and when and how to set that up. So
absolutely. So
we can leave it at that even too. But
on any, no, I'm teasing. I'll try and stay in my lane. But let's just talk about some real life examples that do happen. You move somebody into a home, and later they find out that it has mold, and that mold, they state, caused their child to develop a lifelong chronic disease, of which the damages are $5 million. And they choose to come after you, the agent, because your job was to disclose, and they're not experts. You're supposed to be. You should have told them to get a mold review done. How much can they come after you personally, right? And so what we want to look at is, if we're just out there picking up a paycheck, I'm a person, and you can sue me, and you can sue me for every single thing that I have, right? And that's personal liability. When I set up a limited liability corporation, you can sue the corporation, of which I may be one of the principal owners, but it's just like if I'm a shareholder for 3M and one of their trains kills 10,000 people, just because I'm a shareholder, I don't want to be sued for that. I don't want you to take my house and my cars. So in the United States, we have provisions under the law that say, as long as you set up a corporation, then there are limits to the liability that you can hold the owners responsible for. And as long as you're in a legal business line and you're following the rules, we're going to limit that they can sue your business, Ben, your personal liability corporation. So I have a corporation called BPDM. And if this mold situation happened and I was found to be in the wrong, I knew there was mold, I didn't disclose it, or I didn't properly follow the steps, they can sue BPDM for almost everything that it's worth. And I can file for bankruptcy under BPDM, but what they can't do is come after me personally, or there are limits to what they can come after me personally for. So that's why we call it a limited liability corporation, is we create a shell around our business, and we say that we carry insurances and we do the right things to make sure that as an entity, we're covering ourselves. We're not trying to hide from civil liability, but we're trying to limit it. We're trying to say we're in the business of selling houses, and sometimes things happen that are beyond our own financial control. So we limit that liability around a corporation and the funding of that corporation. And once they've sued that corporation, they're not able to then move the ball, as long as you've done nothing criminal, over and say, well, now I really want to go after Ben because he's a principal. They can't. My liability is limited to the corporation. So that's a real quick kind of explanation. It is the single biggest cover your butt thing that you can do in this business. And I don't know where everybody else worked, but what I can tell you is this is, you're going to be doing transactions. If I asked you what's the biggest thing outside of real estate you ever sold, maybe it was cars for $50,000. Maybe it was appliances for $1,000, but doing $500,000 and $1 million transactions that include where people live, where water quality, lead paint, all of these different things affect people's lives. The liability is huge. So a limited liability corporation is absolutely mandatory. It's the best way to protect yourself.
Hey,
That's
Ben,
a great explanation.
That
on those limited liability corporations, do you have to have board meetings? Do you have to establish like president? Do you have to have quarterly meetings, or do you just have to get it set up and then run it from there?
So each of them do have their provisions and structures. So PLLC is going to have lighter requirements than a pure LLC. But to answer your question, for the most part, yes, you do. And it sounds complicated, but it's really not. So as an example, for my C Corp, I have that managed by LegalZoom. So what they do is they'll send you something, and it's a big book, and it says, here's your business book. And it's your articles of incorporation is what that's called. And in there, you fill out, who's the president of this company? And is there anybody else on this liability corporation? If it's a PLLC, personal, that's going to be you. And you have to have minutes, and it's kind of structured in a book for you, but it's not like you're really going to do like they do in real companies where you're like, hear ye, call this meeting to order. We call a quorum with Mr. Dunsworth. It's really not. It's much more of just a filing that you'll do on a quarterly basis in most cases, and it's a single piece of paper. And what they'll do often, if you do use one of the cloud services, is they'll actually call you, say, hey, do you have anything you want to put in the minutes? And you'll be like, I sold some houses this month. They're like, awesome, and you move on. I would encourage you that while I'm talking about it as something you don't have to put a lot of time into, you don't. I'd encourage you to. This is your business. This is your business. And as you become successful and that starts to be a pretty profitable business, and you say, well, you know what, I want to move into commercial, or I want to move into property management, this is going to be your business. And it's a really fun thing. Maybe I'm just a dork. But the deeper I get in protecting my business and thinking about it and how do I grow profits instead of how many houses do I sell to go to Mexico, the better I think I get at being in good financial shape.
Great, thank you.
You bet. Any other questions I can grab real quick?
Can we share a few ahas or takeaways with Ben? I know there was a lot. Let's
I thought you did an excellent job on putting that together and giving us some good insights.
Well, thank you. I don't know if I made it through all the material. Did I? I got through.
You did. The rest of it is like the success list in Command, and that's what I get to do after. So yeah.
Well,
I love how I think it's kind of a fun way to think about, I need to sell this many houses to go to Mexico, right? Like I think looking at it that way, but then I think you said something at the very beginning when you were explaining how to kind of come up with, here's how much money I want to make. And I think sometimes we just throw out this number. But what was so important about what you said, Ben, is you really took into account, okay, how much money do I need to live, right? To pay my groceries, to pay my mortgage. And then how much more money do I want to have to live the life that I want to have, right? And I think that's so important when we're actually thinking about the numbers. Sometimes somebody asks you the number, and I think that's why so many people initially will come in and say 100,000, and just because it seems like the right thing to say. But did we really think about those other pieces? Oh,
it's so hard. It's really hard, and it takes the discipline. And every year we all get better at that discipline. But you can almost think about it depending on your price point. And look, this is oversimplified, but this is how I think about it in my head. Is each month I get an escrow or a listing, and I'm like, there's one for the government. And I get the next one, and I say, well, there's one for me and KW. And then that third one, Mexico. And that's sort of how I look at it. And the fourth one, maybe I'll take care of my kids at Christmas or something. They're all fully grown, just to be fair. Well, look, I really enjoyed, and thank you for the opportunity to meet all of you. I'm here. I absolutely love KW. I love selling houses. Thomas, you and I might have something in common because I wake up a little giddy to sell houses. Sometimes when someone says, hey, do you want to join the ops meeting? I'm like, I want to sell houses. But this is an interesting business. And my favorite part of KW is that we get to make friends and we get to lean on each other. And we pay those royalties and we pay that company dollar in for a reason. And it's for classes like this, but it goes a little further. I will send each of you my contact information. I'm 100% available. If you want to just spitball ideas, or you're coming around a deal that's complicated and I can be helpful. I love to sell houses. I love to work with people. It's my passion. I'm out in Fountain Hills, which is a goofy little market, but I work in Scottsdale in the Valley. So I'm at the market center often. If anybody ever wants to catch up, or you want to dive into this pretty thick coursework, if I can be helpful, please know I'm just a phone call away.
Thank you so much. And would you put your info in the chat box before you leave the room?
Absolutely.
Thank you, Ben. We really appreciate you taking time with us this morning.
Thank you. I'll see everybody soon. Take care.
Okay. All right, you guys. Well, we are going to finish up. I have a few things to share with you all this morning. So kind of staying on this topic of finances before we go into our last objection handler of Ignite and kind of talking about where do we go from here, I wanted to share, I'm not sure how many of you may have had the opportunity to see this maybe in an email or on social media. This is something that I actually just started participating in. It started on Monday, so I'm going to pull up the website here, and the website simply is winmakegive.com. So it's called the Wealth Series, Win, Make, Give Wealth Series, by Ben Kinney and his team that are putting this on. This is completely free. And what I'm loving about it is it takes a deeper dive into really looking at what our finances are. So when Ben was talking at the beginning about how much money do you need to live, if you're somebody that, and I will fully admit a few years ago, like me, I kind of just, I made the mistakes of owning a business and not keeping track and saving for taxes. I felt that pain of having to owe, the government and owe afterwards and set up payment plans and, have kind of been there and done that. And numbers are not always my thing. I don't like looking at money, but now that I'm learning how to manage it and manage it in a way that makes sense to me, I feel empowered by it and I'm excited by it. I understand it more and I see what I have, where I've come and where I want to go. And this, again, I have no affiliation with them. I don't get anything for sharing this. I'm sharing it with you because it's helping me. So on this winmakegive.com, they'll ask you to sign up just by giving your email. So you'll see I had to give my name and my email, but that's it. Everything else is free. It's also done. What they'll do is they do a podcast, and their podcast comes out Mondays, Wednesdays, and Fridays. And you'll whatever way you guys get your podcast, you're going to go ahead and download that. And then what I've been doing is I've actually listened to the podcast first. And then I go back in here and they talk about these tools in the podcast. So they talk about like a personal budget and expense tracker. Let me pull up real fast here. They give you access to those tools. So you can actually, here's what I wanted to show you. Sorry, they give you calculators. So in part 2, which came, so you see it said part 1, part 2, part 3, today was the 3rd podcast. So they put them in to match the podcast. And then you kind of go to the website, Wealth Series. If I listen to podcast number 2, here's my workbook, my free workbook for podcast number 2. So then it reviews everything that they spoke about. And again, completely free. And then it tells you what to do. So like, I haven't listened to part 3 yet because I'm still working on making sure that I get everything in part 2 complete. And part of that is checking, you kind of learn what's your net worth, how do you budget. This highlighter exercise is something that is super powerful that I just finished and was very enlightening to me. They talk about printing out your bank statement, your credit card statements, and going through them with a highlighter and highlighting the expenses you can't live without, and highlighting in a different color things you could do without, things you can go without in emergencies, and then taking the time to calculate these required monthly expenses opposed to, what did you spend this last month on dinners and lunches that wasn't really necessary? What's that number? So they take you through a lot of exercises and I'm saying this for me because I'm not that like numbers person. They take you through it in a step-by-step way that's really easy to understand. So it was winmakegive.com. Put it in the chat box. winmakegive.com and Ben Kinney. And that is also the podcast. So when you search podcast, you can search winmakegive.com. So I wanted to make sure that I shared that another kind of financial tool for you guys to help you out. Have any of you guys dove into that or seen that yet? No? Okay. Definitely take a look at it.
Jackie, real quick.
Yeah.
I'm probably the only senior on here who's retired. and I was very fortunate to have been in another field, but I just want to share, this is just sort of a little bit of life experience. In the last few years, we've gone through the Great Recession, what's going to become the Great Depression we're in right now. And I have to tell you that, and you'll see it online, that there's a lot of seniors right now that have saved their entire lives and didn't save enough because basically they may have to work till they're 90. So please, 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 I want to work with all of you to make sure you're starting out in your career, wherever you are in your life and for retirement, make sure you save, and don't just go out 45 times a week to go to lunch and dinner and whatever. That money over 20, 30, 40 years, which seems like a long time, will make you hundreds of thousands of dollars in retirement. So please, I beg of you, to don't go out and just to try and show, hey, I have the $500 boots and the $300 pants and whatever. Take that money, take 10 to 15% of everything you ever make and put it away and invest, not just in retirement plans, but in assets and whatever it may be, because a lot of people have even seen that go away. Restaurants, hotels, I work in that field. I can tell you people who've worked for many years have 20, 30 major properties and they're going to go bankrupt. So please save, don't spend. Thank you.
Thank you. We appreciate you. We appreciate everything that you shared with us too. It's been really helpful to have you part of this Ignite round, Keith. We really appreciate that. So great advice. And you heard him talking a little bit about assets and investments and things like that. That's also built into that win, make, give. So I really encourage you guys to make that. It's not going to go away. Like, it's always going to be there. You'll have access to it. So it's not something, but it's very important. So it's a great tool. All right, so let's go into our last Ignite objection handler. And then I'm going to share some news with you about scripting and what that's going to look like moving forward. All right, let me grab it here. So we had done a little on open houses yesterday. Thomas did a great job handling yesterday's open house objection handler. So I want to do one more open house. They're making a comeback, and they're a super powerful way for you guys to get clients and to get people in your pipeline. So I figured, what better way than to end with one more open house objection that usually comes up when you're introducing yourself to somebody at the door. Hi, welcome to our open house. What brings you in today? And before you can even say anything else, say, oh, we already have an agent, thanks. Just looking around.
Great. What's her name?
Oh, it's my sister.
Pardon, I didn't hear what you said, Jackie. I'm sorry.
Okay. It's my sister, actually.
Oh, great. I'd love to have her information so I could contact her and let her know that you stopped by the open house today.
No.
Okay. Her name is Sally Smith.
And what was your name?
My name's Jackie.
Great, Jackie. It's really nice to meet you. Why don't you have a look around and let me know what you think of the property.
Okay, will do. So I definitely think that's one way that you handle it. She asked for the name. I said it's my sister. She still pushed for a name. Some people will give it, some people won't. She went multiple avenues. What do we have any other thoughts for when I said it's my sister?
I would say, is she here in Arizona, or does she work out of some other state?
Yeah.
Yeah. I'm going to make it a little challenging for you. She's here in Arizona.
Oh, who's she with?
She works with RE/MAX.
RE/MAX. Oh, very good. Does she usually let you go looking at open houses all by yourself, or does she like to accommodate you and, be with you to be able to, see what you like?
That's awesome. She's told us she shared the open house list with us, so we just kind of go on our own.
Oh, so she just kind of sends you out just looking around all by yourself?
Yeah.
Well, what if you wanted to get into a house that's not doing an open house?
Well,
Is she there?
I just have to ask her.
Oh, okay. She's super busy right now?
Yeah.
Wow. And how long have you guys been looking?
Just for a couple weeks.
And have you told her exactly what you're looking for? What type of place you're looking for?
She has a general idea.
Oh, okay. And has that been pretty successful so far?
Well, we haven't found one yet.
Ah, okay. Has she been in real estate for a long time?
Yeah, she's been doing it for years.
No kidding. I'm surprised I never heard of her. Wow. Well, why don't you look around, and then, if I can help with anything, I'll see what I can do for you.
Okay. You were like on the verge of getting, like, everything you were saying, James, was so good. It kept making me think, God, she always let you go by yourself. Like, awesome, awesome, awesome. And then I thought you were going to actually lead me into, when you asked, does she know what you're looking for? has she sat down with you and had a buyer's consultation with you?
Yeah, that's where I should have turned. You're right. I should have gone down to close, right?
Yes.
Yep.
Yes. And, you know, and then I would have in this role, let's do it. I'm gonna say, does she know, ask me again.
Okay. Does she have a good idea what you're looking for?
She has a general idea.
So she never really sat down and did a whole buyer consultation with you?
Oh, what's that?
Oh gosh, at Keller Williams, we do these great things to save you time and money. You sit down with us and we go over everything that you want. We narrow down your search to get you exactly what you're looking for. And then we really focus on finding exactly what you want. So you're not spending all your time wandering in and out of open houses and just kind of drifting around, you know, different neighborhoods. We kind of zero in on exactly what it is you want and need, and then we go out and get that for you.
Jesus,
Does that sound like something you'd be interested in just taking a little time to talk about?
Yeah, it sounds like she kind of gypped me off, doesn't it?
Well, you know, it's easy when you have family to not pay as much attention, you know. It's just your sister, it's my brother, you know, whereas we're full-time dedicated to trying to find you exactly what you need. So I think the consultation would be great. Is tomorrow at 5 good, or would you rather do Saturday at 1? What works better for you?
Actually, tomorrow at 5 sounds good.
Perfect. Will it just be you, or you and your husband or boyfriend? Who would be?
It'll be me and my fiance.
Oh, perfect. And what's his name?
Mark.
Mark. Okay, great, Jackie. I'd love to sit down with you and Mark tomorrow at 5. Let me get your email and your phone number, and we'll get that set up.
Great. Here you go.
What if they said, if you said, Jackie, it's going to be me and my sister?
That would have been really mean. I was hard.
Oh, well, let's find out what she's doing in the business. I'd love to meet her. Bring her along.
Bring her along so I can show her what a buyer's consultation looks like.
Yeah, she probably needs to learn.
And then maybe one more question to save you time before meeting. Have you signed any paperwork with your sister?
Right.
I don't want to step on her toes, but I do want to give you more information. Did you guys sign an agreement together?
Right. You have an exclusive buyer broker agreement with your sister already? Yeah. Okay.
Yeah. Most likely in the scenario that we presented, she'd say no, because
doesn't sound like it.
Right. But I loved all those little things that you said in such, they were in a positive way, but they really made me think like, oh, well, no, I guess she just sends me a list. And so I liked that. Good tie downs, good replay of that part at the end to get the appointment. Nice job.
This video was brought to you by Keller Williams Arizona Realty TV. Check out the rest of our channel for more amazing real estate training videos. If you like what you see, like and subscribe, and hit that bell so you get notified when a new episode comes out.